What is going on? The second and third largest bank failures in US history happened in a 3-day period, and it's got investors, regulators, and bank customers understandably concerned. There is still a lot of information we don't have about the collapse of Signature Bank, Silicon Valley Bank, and others. But what we do know is there's plenty of reason to have faith that the US banking system will be okay. Unfortunately, there's also plenty of reason to worry that some of the issues that brought down Signature and SVB could be evidence of a bigger systemic problem. I'll explain. First, let's talk about the big picture risks. Silicon Valley Bank was invested in many of the same assets as other large banks: US Treasuries, mortgage-backed securities, and other bonds that have seen big declines in value over the past year. Those are actually the safe assets that the Federal Reserve requires banks to hold. Many banks are invested in things with much higher risk profiles, like stocks, leveraged loans, and derivatives. Those have also seen big losses. And banks often use borrowed money to make those investments in an effort to increase their returns. The Fed lowered the reserve requirement ratio for banks to 0 in March 2020, and has still not raised it, meaning banks that hold billions in deposits can hold as little as $40 million in cash. US banks had unrealized losses of more than $600 billion at the end of 2022. And things haven't gotten much better in markets since then. If depositors start to demand their money back, lots of these banks could need to sell assets at a loss to meet those demands. Or they might try to raise money through stock or bond sales, like SVB did, and that could lead to more runs on more banks. But there is some good news. Banks have stronger regulations than they did before the global financial crisis. The nation's largest banks are regularly put through so-called stress tests by the Fed to determine whether they could withstand a crisis. And the US banks determined to be systemically important have all passed. There's also a lot more money deposited in fewer banks now. Between 2010 and 2020, the number of banking institutions dropped by almost 30%, and the 5 biggest banks now hold nearly half of all FDIC-insured deposits. That's not necessarily great for consumer choice, but it does mean that the bigger banks are better able to fortify themselves against short-term panic and market losses to stay in business. Another reason to think that this is not a wide-ranging problem is that Silicon Valley Bank had what folks on Wall Street call idiosyncratic problems, meaning issues that were unique to them. As its name suggests, Silicon Valley Bank did a lot of business with venture capital firms, startups, and others in Silicon Valley, home of the US tech industry. Tech investment has gotten battered this year, as investors have been spooked by tumbling stock prices. The Fed's rate hiking cycle has been especially damaging for shares of tech companies, because many are relying on making profits far off in the future. Higher interest rates today eat into those potential future profits and make tech companies look less valuable. Plus, it costs more for venture capital firms and other investors to borrow money to put into these companies that are not turning a profit in many cases. So many of the firms and individuals who had money held in SVB were taking it out rather than putting more in. SVB also had invested big in mortgage debt, much of it coming at the top of the market, and home prices have generally lost value since then. And the bank purchased limited market hedges like swaps that could have reduced their losses in the event of big downturns like the ones we've seen. So are we in for more trouble? There's no way to know for sure. But if you've got less than $250,000 in an FDIC-insured bank account, there's no reason to take your money out. As we've seen recently, that's insured by the government. And even if banks fail, depositors below the limit will be made whole. Thinking too much about how you look instead of minding your books can get you into trouble. As rapper Denzel Curry says, "Everybody want to be the man. I'm the brother counting money in the backdrop." That's all for now. See you next time.